Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we made it to the end of the week. It's Friday, right? What do we got going on in the markets? Not a whole lot. The Dow's down about 40 points, but that's about it. Kind of flat, right? We're kind of at the moment of truth right now. So the NASDAQ, it's come down and below its 10-day, and it's sitting right on its 50-day. The S&P sitting right on that 10-day. It's the moment of truth. Now, it's either going to bounce up from here, or it's going to break through the 10-day, break through the 20-day, the 50-day, the 200-day, and start going lower. Now, that's what I think will happen, but we could still get one more bounce up. Now, if it gets to that 4150 level, you see the shorts, they start piling on. And if it gets to 4200, those shorts are going to be running for cover. We might get another short squeeze. But I actually think this moment of truth is where the markets start to break down, start to go lower. We talked about it. We're coming into the, as I would say, the bad half of the year for the stock market. That starts May 1st and it runs to November 1st. That's the bad half, right? And the VIX is still extremely low. And there's a saying, when the VIX is low, it's time to go. And they're saying sell in May, go away. I think these are both going to come true. I think the market is going to start to come down. That's just my take. Your take's probably completely different. Now let's get over to the real estate market. All right. So the real estate market, well, before I go to the real estate market, I want to talk a little bit about where the market is. Okay, so back to the stock market, we're in the exact same place that we were 2 years ago. Okay, so where we are right now is exactly where we were 2 years ago. So people think, oh, well, I haven't lost any money. But that's not really true. You see, what you've lost is purchasing power. In the last 2 years, we've run about 10% inflation rate, 10% a year. So even though the market's the same, you're kind of down 20%. That just makes sense. Kind of simple math, right? Now, of course, the government, they tell you we're only at 5% inflation right now. We could believe them, okay. We're running at 5%, but I think it's closer to 10%. Now, I do not think the inflation matter is going away anytime soon. Now, why is that? Well, it's because they're going to continue to print money. They have to. Look, everything is based upon this debt bubble we're in. It's a debt bubble. Right now, everything's in a bubble, but it's because of debt. It's because of debt. Corporate debt keeps the stock market up. Real estate debt keeps the real estate market up, and the bonds is debt, so that stays up, right? So it's a matter of keeping everything up in this debt bubble. But if they stop printing money, for 6 months, the game's over. They have to continue to keep printing money. Now, the government is coming up to what's known as the debt ceiling. It's so cute when you get the Democrats fighting the Republicans. They're going to come out with this new debt ceiling, only $1.5 trillion higher, and that'll take us out to March of 2024. Then we can do it all over again. This debt ceiling thing's funny. There's no way our government can survive another year on only $1.5 trillion. They're going to print much more than that. They're going to print 3, 5, 10 trillion dollars because they have to keep the markets propped up. Okay, so now to me it's absolutely clear that the government has officially lost its mind. Now, I know a lot of you think the government lost their mind years ago, but it's official now. I mean, this new program, right? They come out in the mortgage market and they say that the people with good credit scores are going to have to pay a fee to subsidize the people with the bad credit scores. You just can't make this stuff up, right? Okay, it gets better than that. Look it. If you put down a big down payment, you're going to be penalized because the people that don't have the down payment, we want them to be subsidized. We want to give them a lower interest rate. Now, I've been in this game a long time, right? Now, in the old days, what I used to do is I used to teach people how to repair their credit so they could go get a mortgage, right? You repair your credit, you pay off things, you make your credit look better. But now I have to teach people, no, that's the wrong way of doing it. You got to go out and you got to miss some payments on the credit card. Run those suckers up as high as you can because it'll get you a lower interest rate when you buy a house. I mean, that's just completely ludicrous. I think you all agree on that, but it's a form of socialism again. Everybody gets a trophy. We want people with bad credit to go out and buy houses. Everybody gets a trophy. We want you to take your Section 8 vouchers and use those as a down payment for the housing market. To me, this does not make a lot of sense. It's completely crazy. The government has lost their mind. Look, in California, we give people 20% for the down payment. We just hand it to them. Here's some free money. Now, people tell me that's not taxpayer money. I go, well, where'd they get it from? Look, the government doesn't have any money. They don't produce anything. They don't make anything. They only have taxpayer money. If they're handing out 20%, it comes from the taxpayer. People go, but Mike, they sell bonds for all that stuff. No, it's taxpayer money. The taxpayer, your neck is on the line when that money gets lost. That's just a fact. Okay, so they're handing out 20% free money in California. Here, go buy a house. Everybody gets a house. Everybody gets a trophy. The government programs, people are telling me, are what's going to hold up the housing market. That's why the housing market can't come down. And I would beg to differ with that argument. I'd say these government programs are the exact reason the housing market came down. They're the reason it came down in 2008. They're the reason it's going to come down this time. You put people in houses that shouldn't be buying houses, you're going to get foreclosures. You're going to get a lot of foreclosures. We proved that in 2008. We were giving loans to anybody. If you were breathing, you got a loan, right? You could go in and buy a house. It was called the subprime crisis. We're doing it again. We're putting people into houses that should not be buying houses, and this will end very bad. It will end really, really bad. It will end with the housing market collapsing. They're putting people in, just giving them money to go buy a house. That is going to end bad. But people go, but Mike, they're coming out with the 40-year mortgage. That's going to save the housing market. Really, if you believe that, then you should go out and buy a house. I'll be willing to sell you the house. I'm a real estate broker. That's what I do. That's how I make my living. But right now, I can't teach people how to repair their credit. I have to now teach them how to ruin their credit so they can get a lower rate on their mortgage. Unbelievable what goes on these days. It really is. It's quite humorous to me. Now, okay. All right. So we got this housing bubble that is bigger than the housing bubble was in 2008. Now, why is it bigger? Well, how did it get bigger? Well, it got bigger because we're going to print money. We're going to print endless trillions and trillions of dollars. Now, if you think this can go on forever, please leave me a comment and tell me how you believe houses will double from here in your area, because your area only goes up, and I get that. You live in a great area. It's an area that goes up, and as long as we keep printing this money, your area is going to continue to go up, and we can print money forever because of the modern monetary theory. That's what they teach in school now. They teach in school that you no longer have to pay taxes, that the government can just go out and print the money. And why not? Why not? Doesn't hurt anything when you print the money. Of course not. Anyways, your area will continue to go up. But the bubble is bigger now than it was in 2008 because we printed all of the money, right? So we're in the bigger bubble now. All right. Now, everybody still wants to go out and buy a house. Now, I'll be the first to admit that there's demand for houses, right? Everybody wants to buy one. The millennials in particular, they're looking to buy their first home. They want to get in this market, and they want to get in at the exact top. They want to get in where Billy Bob got out at. They want to enter the market. And I just don't get why there is such a hurry to enter the market. Okay, right now it is cheaper to rent than it is to buy. Yeah, but Mike, if you rent, you're throwing your money away. You're throwing your money down the drain when you rent. I want to be a homeowner. Great, go out and buy right now. Pay 20% more a month than it would cost you if you were a renter. Okay, so I don't understand why people want to hurry up and they want to buy a house right now. Look, I'll tell you this. The people that bought in the pandemic, the ones that bought in the last 2 years, about 65% of them have regret. They wish they did not do it because they're now realizing that it was a stupid idea as they're seeing the housing market come down, as they're seeing their down payment being washed away, as they're seeing themselves get this negative equity. There are officially underwater. Many people are already. Look, they come in the last year or two, they put 5% down. We're down 13% just since June. Now they put 5% down. Let's say they bought last June, right? They put 5% down. We're down 13%. They're down another 8%. So if they wanted to sell right now, well, what would happen? Well, they'd have to bring more money. Would it be 8%? Well, no, they'd have to bring the 8% for sure, but they'd have to bring another 6% to pay the realtors, to pay the fees to sell their house. So they'd be down about 14 or 15%. They would have lost the 5% they put down. Let's say they bought $1 million house. They would have lost the 50 grand they put down, right? But they'd lose another 8% plus 6%. Let's just call it another 15%, right? So they'd lose the 50 grand they put down, but they'd be out another $75,000. So there's a lot of buyer remorse out there right now. You do not want to be buying a house when the house prices are going down. Now, if house prices are going up, it's a lot of fun. You put that 5% down and you go, wow, look at all the money I'm making. I can sell, get $250,000 and I can go have a big party, get a new car, take a vacation. That's correct. You can. And that's what Billy Bob did. He sold at the top. He's now on vacation somewhere in Mexico. He's spotted, just hanging out, waiting to come back in when the market comes back down. And that's what his plan is going to be doing. But look, right now, you could sit and rent a property, right? 20% less per month in most areas. Of course, not your area, but in most areas, it's about 20% lower to rent than it is to buy. All right, so now you're sitting back and renting. So now everybody, though, they want to buy. They want to pay that extra 20%. And then they want to watch the house price come down. So not only are they paying 20% more a month, they're losing $50, $100, $200,000 as they watch the house price come down. Now, that's just the way that's happening right now. But Mike, we're at the bottom. Look at Dave Ramsey. He says it's a great time to buy. We are not at the bottom. Look, the layoffs have just getting started. And there's a lag effect when you have the layoffs. You got people being laid off, right? So these people have lost their jobs. Okay, 63% of the population lives paycheck to paycheck. All right, so the first month they go, oh, I can make my mortgage payment still. Ain't that great? The second month they don't have money for the mortgage payment. Oh, well, that's all right. I'll catch up on the third month. The third month they're already behind. Do you realize there's 1.5 million people already behind on their mortgage payment? These are people that are in jeopardy of being foreclosed on. Now, foreclosures have been going like this. They've been going up, right? They've been going up consistently for the last 23 months. Foreclosures have been rising. Now, why is that? Well, we've taken people away from that safety umbrella that they had during the pandemic. They were in forbearance. You could not foreclose. But now you can, and the foreclosures are ramping up, just like the evictions are ramping up. That eviction moratorium, it's off now in just about everywhere across the country. It's gone. So now the landlords are starting to evict the tenants, and they don't want to be landlords anymore, so they're now dumping their properties. The foreclosures are now ramping up. 23 straight months we've been going up. Now we're only up 22% year over year on the foreclosure number, but it is picking up steam. And as these layoffs happen, it's going to pick up a lot of speed, and that's what's going to bring the markets down. Now look, I know you want to get out there. I know you want to buy a house today, and I get that. And as a real estate broker, I'm supposed to tell you it's a great time to buy. I'm telling you, just hold off till the fall. Hold off till next Christmas. You will be so thankful that you did. You will be so happy that you waited. Now, look, you can wait longer. That's great. But look, it's 6 months, 9 months. It's not going to kill you. Stay with your rental property. Keep renting 20% lower every month, and the property's not going down. So just sit back and rent. Save that 20%. Now, take that 20% that you'd be paying for a house. What would I do with it? I'd probably put it in silver. Silver's on the way up. And I'm still say that yet someday 500 ounces of silver will buy you the average price house. That's my take. Nobody believes that. That's crazy talk. Crazy talk, Tall Mike. You just talking crazy on a Friday. That's possible. That's possible. But it's the weekend, everybody. Get out there, enjoy the weekend. But first, give me that thumbs up. Hit the subscribe button. I want to talk to you again next week. Bye-bye now.